Good morning, Wall Street winners. It is about to be the new year of 2025. We're into the last trading day of 2024. It's January 31st, 2024. And I wanted to leave you with some thoughts for the new year and kind of what I'm thinking about in terms of themes and narratives that we're going to be hearing going into the new year. So, this whole video is not about a specific stock, but it's more about investing themes and narratives to just keep an eye on and give some consideration to, because all of these obviously will have an impact on the US economy, but the global economy as well. So let's start off with interest rates. I think that US interest rates are likely to remain at the levels that they're close to right now, or that they've ended 2024 in. We may see a rate cut coming in the spring. I don't think it'll be in January, but we may see a rate cut coming before the end of April. I think it'll be 25 basis points. I don't think it'll be more than that. But I think we're likely to also see a rate increase in the US in 2025 as well. I think we're going to see huge changes at the Department of Justice, which will likely abandon all antitrust pursuits against large US organizations. The primary reason behind that is the US and the new administration, but the US as a whole, it needs dominance in the technology sector. Right now, the wars that are being fought, although there are some old school wars like we have with Israel and Palestine and over in Ukraine and other areas, will continue and will take place in, call them tier two, tier three countries. Um, I think we're going to see more of a technology war continue, as well as a currency war. And in order to win and dominate in the technology war, you're going to have huge, huge North American or US based companies. And so the US will not likely try to break up the likes of Google, because Google is going to be one of the US's superpowers in fighting these technology wars. I think we're also going to see increased protection for Taiwan from the US, especially with the new administration, to help safeguard the semiconductor manufacturing that takes place over there, as well as its US oil purchases. Taiwan, I believe, is the sixth largest purchaser of US crude. And oddly enough, the Netherlands, I believe, is the first last year. This list obviously changes year to year, but Taiwan in 2024 was the sixth largest purchaser, and the Netherlands was the first. So they want to protect those assets, and they want to ensure that semiconductors that are being used to drive those massive technology companies in the US are not under threat by China. And we're going to see tariffs, as we've already started to hear about, used as a threat to various nations: Canada, Mexico, China, many others. But their implementation will likely create some higher inflation in the US. What'll be interesting is to see how the new administration implements the tariffs, because if they want to do this to drive manufacturing in the US, they may put tariffs on finished goods, but they shouldn't be putting tariffs on input goods or raw materials. So we'll have to wait and see how that plays out. I think we're going to see some US adversaries, China, Russia, likely to increase the number of cyber attacks and ocean pipeline and data trunk or data cable covert attacks. We saw one of those over in the waters between Russia and Finland, where a fishing boat, a Russian fishing boat, was accused of potentially anchor dragging or detonating an explosive charge underwater to sever a data trunk that was critical to communications. Probably see some more of that. We're going to see an increase in gray market transport, or the dark fleet, as it's often referred to, of Russian and Iranian black market oil. And this is going to likely increase the likelihood of an environmental catastrophe in one of our large bodies of water or one of our oceans or seas, um, due to a mishap or some kind of a problem with some of this. These fleets are typically older and are on their way to the boat junkyard, but now they've been called back into service. So if they're not up to par to handle ocean transfers and the loads that are put on these in the distribution of this black market oil, it's highly likely we're going to see some kind of catastrophic environmental event with a leak or a spill or the sinking of a ship or something in that nature. Could be weather related. I think the Chinese economy will likely continue to improve. I mean, it has time on its side. So the more time that goes by to weather the crisis in its real estate environment and its economy as a whole, and as the Chinese government continues to increase its government stimulus and that takes effect and lower interest rates help. I think the consumer economy will slowly start, and it has slowly started to come back. So I think that will continue. What will be a big sign of the Chinese economy getting back on its feet and being strong are really two things, in my opinion. The first is a significant increase in manufacturing. And this could be impacted by US based tariffs, but they could certainly sell to other countries. The other will be to watch Chinese consumer travel. If travel of the Chinese consumer improves or increases globally, then that will signal that the Chinese economy is back to a point where the companies will start to grow. And I think the stocks will turn around in the stock market. The downside to that is it's going to increase travel costs. And I think we're going to see travel costs increase substantially as more Chinese begin to travel again. The other sector that got hit hard in 2024, but did well through COVID, is luxury goods. A lot of those companies are based out of France. But the luxury goods sector took a huge hit this year. And if the Chinese economy recovers, luxury goods consumption is likely to increase as well due to growing Chinese consumer spending. US corporate tax cuts, although not likely to really benefit in the first half of the year, will definitely have a positive benefit and increase in corporate spending towards year end. If we see an increase in government spending and government debt in the US to help grow US corporations' short term profits, this could lead to a substantial drop in the value of the US dollar in the longer term. So I'm thinking in the 2028 to 2030 kind of time frame, although it could come sooner. The US deficit is a huge, huge concern to many right now. And that's something that we'll have to keep an eye on. The government shutdown threat was pushed out, I believe, until the March timeframe now. So we'll revisit that when the government runs out of money to fund itself, and another bill needs to be passed through the US Senate and Congress and approved by the president. We're going to see government investments in the US semiconductor industry, which got approved through the Biden administration and put in place recently this year. I think they're likely to fall short of expectations by 2028. So I don't think we're going to see a lot of news around that in 2025. But I think what we're going to find is there aren't enough skilled workers that exist in the US to support that added infrastructure without increased immigration. Now, one of the positives we've heard this week out of President Trump is his newfound support for the H-1B visa program, which is the visa program that allows for immigrants to come into the country on work visas, primarily for the tech sector. So that's a win for the large technology companies, the Amazons, the Microsofts, the Googles, the Metas or Alphabets, but also for a lot of the consulting companies, the Cognizants, the Tatas of the world, the Dimension Datas, the Accentures, the Avanods, those organizations who have been manipulating the system, the visa system, by submitting multiple entries for the same individual through multiple organizations. Not those companies specifically by name, but the consulting sector as a whole has been proven to be manipulating the US visa system, particularly the H-1B visa system. So we'll have to see what changes are implemented to help prevent against that going forward and reduce the number of, we'll call them bogus applicants or redundant applicants. I think we're likely to see some, we'll call them heroes of the financial sector, potentially pass this year. I'm not going to name anyone because that seems kind of morbid, but we are seeing some folks reach ages that are usually kind of in the end of life range. And if that happens, the companies they run, if they're still at the heads of those, could likely plummet initially, but then recover quickly because most of them have plans, transition plans in place for someone to take over and who's been certainly within the organization in most cases for years and is ready to step in should something unfortunate happen. I think the US will force the EU to increase NATO spending. Trump has talked about this many times, and to buy US oil and natural gas. I think we'll also see NATO add the Ukraine to to add Ukraine to NATO, and that in itself could help to end the war if it is to cede some land to Russia to allow that to occur. So I think we should see the end to the Ukraine war this year. And I think we're going to see more and more countries left with governments that are being, with left wing governments that are voted out. So we're seeing a huge shift from left wing governments, whether it's in France or Germany or the US or Canada. I mean, Canada is very close to voting out Trudeau in a non-confidence vote, and replaced with more conservative. Right wing may be strong. In some cases, they're very right wing, but more conservative leaders. And I think we'll see that happen in more and more countries. And then in terms of the markets, I'm expecting the US markets will rally in the first quarter, first maybe even 4 months of the year on strong Q1 and initial Q2 earnings. But then I do expect we could see a bit of a pullback or a correction. And the recovery post correction is going to depend on a number of factors, most of which I've talked about already. But just to recap four of them: the status of global conflicts and where we are with those, but also the inflation impact of tariffs on particularly the US consumer, but also on other countries, because a drop in the economies of neighboring countries to the US, primarily Canada and Mexico, will have a small ripple effect on the US. Where it'll have an effect on the US is a number of Canadians do own property in the US and do travel to the US. And if their income and or their net worth is affected, it may reduce their ability to spend and benefit the US consumer marketplace. We'll also see the recovery of the Chinese economy being a part of this. And if it recovers more quickly than it has in the last couple of years, that could help with the correction and how quickly that recovery happens after the correction. And then the returns companies are seeing from their AI investments. This is going to be another key area. We've heard from the likes of some companies, Walmart and Meta and others, that they've been starting to see returns from their AI investments. But we're going to need to hear from a lot more of these companies and not just tech companies for that to happen. And the downside to those returns from AI could be a cost to jobs. So we're also going to have to keep a close eye on US job numbers and going to have to be monitoring for a drop. We want to see a recovery and a growth and not a drop in job numbers. So overall, my outlook for 2025 is fairly positive because I believe that you can make money in the stock market in any kind of economy, in any kind of market, but your investment strategy and thesis needs to change and adapt with the changing market. So I hope that helps. Hope it gives you something to think about going into 2025. And I hope you've enjoyed listening to the videos on the channel in 2024. And if you have, I'd encourage you to like and subscribe. And more to come in 2025. Happy New Year.